Good afternoon, everyone. I am CA Varun Gupta, the moderator of this webinar. We are delighted to welcome you all to this webinar, which is being organized by the Continuing Professional Education Committee of ICAI. CP Committee has organized a series of webinars for the benefit of members at large from 6 October 2025 to 17th October 2025 from 12 p.m. to 2 p.m. 4 to 6 p.m. on 15th and 17th October 2025. We request you to please block your calendar for the same. It is my pleasure to be a moderator for the webinar on tax audit, clause 1 to 12, and important issues in clause 16, 17, 32, 34, 40, 41, and 42, and standards on auditing. In the short while, we will start this webinar. First, I would like to appraise you about the CP committee. In today's ever-changing professional scenario worldwide, the biggest challenge the professionals face is how to stay on the top of their game while adopting the new requirements and norms. Therefore, it is imperative to aim to be up to date, to offer unique guidance, influence others with their innovative approach and expertise. It is also vital to stretch old ideas beyond traditional boundaries to create new perspectives. In this context, continuing professional education facilitates professionals to maintain, improve, and broaden their knowledge, skills, and expertise required to achieve their professional goals through webinars, seminars, etc. The program for this afternoon is as follows. We have two sessions of 1 hour each, and the topics are tax audit, clause 1 to 12, and important issues in clause 16, 17, 32, 34, 40, 41, and 42. Standards on auditing and overview. Our eminent speaker will talk about the above mentioned two emerging areas of professional interest. We have with us our first speaker for today's session, CA Vimal Chopra. He is a practicing CA since 1989, bringing over 3 decades of professional experience. He has held various leadership positions in the Jaipur branch and CIRC of ICAI and has been co-opted member and special invitee to key ICAI committee. He has delivered hundreds of lectures across India, both online and offline, and on diverse professional subjects, and has served as an ICAI selected online expert assisting bank auditors. He is currently the Honorary Treasurer of BMVSS Jaipur Foot, National Treasurer of Ratna Sangh, and has represented India through BMVSS under the India for Humanity initiative of the Ministry of External Affairs in Kabul, Afghanistan. Now I invite CA Vimal Chopra sir for deliberation on his session. Over to you, sir.
Thank you, Vijay. Thank you to CP committee through the chairman and through the entire team of the CP for providing me an opportunity to read the exposure draft, to read the expectations of the law, and to mix the experience and get an opportunity of learning from the possible queries which probably we will get, and definitely we will attend them after the sessions. So, friends, this session I have divided into some parts. First is the part A, which is the basic details, which generally we copy paste, and then I have taken up 3 sets of provisions which we will discuss. I'll try to save some 10 minutes, 5 to 10 minutes at the last, so as to take up the queries, if any. With this, I am sharing my presentation. Just a minute. It is visible to all of you now.
Yes, sir. Visible.
Thank you. See, these clauses 1 to 12, as I shared with you, are 1 to 8 are part of the part 1, part A, and rest from clause number 9 until the last, it is part B. Now, what is tax audit? It is whether it is an audit or it is a collection of data or it is furnishing of the information or what kind of audit tools we have to apply. We have to verify or we have to fill up the blanks or we have to examine and all those things we will be discussing here. So I have relied on the exposure draft, which is a revised guidance note on tax audit under section 44AB, prepared by the direct tax law committees, which is available on the website. I would request the participants of this webinar to please open that exposure draft, because lot of details wherever I will drawing your attention to will be available in that exposure draft. Then I have also mentioned in each heading the para of the relevant guidance note number and the page number of the guidance note, so that you can quickly retrieve to the detailed provisions where which my slides would be referring to. So class A 1 to 8 are generally what I have seen in the life is that they are copy paste type. We sometimes ignore the important changes which might have occurred in the case of a SESI. So I would like to draw your attention in the very beginning. And in part B, I have taken up in all 11 clauses running from 9, 10, 11 to 12. Then second set 16, 17, then third set 30 to 32, and last set is 40, 41, and 42. Now, an important question was raised to me by my office team is that, sir, what is the difference between furnishing and submission? Why we find in the law that certain reports are to be furnished? Why we don't use the word submit? So, to my understanding, furnishing is generally whenever the certain information which is required by the law or the rules or has to be provided in a certain manner by uploading it, by filling in the required format or in the prescribed manner, verified in prescribed manner, etc. So it is kind of, a requirement made mandatory upon you is called furnishing. Whereas when we say submit, like presenting formally for examination, for processing, that that is there is a discretion, there is a freedom of what you are submitting, and it can be beyond the corners of the expectation. You can also add something which is relevant to the information which you are supplying, so it is submission. So that's what. And then form number 3C is what, whether it requires submission or furnishing. So the language used by the law is furnishing. And revision of report is permissible before the end of the assessment year. So it is not that whatever that you have filed is final. If you find certain errors or omissions encrypted therein, so at an appropriate time you can revise it. If it is related, if it is something which necessitates recalculation of these allowances under section 40 or 43B, then yes, it has to be before end of the year. That is the period within which you can revise your income tax return. And for the ready reference of the viewers, Form 3CD, you can use Appendix First, which is on page number 277 of guidance note, which provides you the text of form number 3CD, updated form 3CD, which is relevant for assessment year 25-26. Now, the some questions are always asked on many platforms, that what is the difference or what is the purpose for which the word observation, comments, discrepancies, inconsistencies have been used. Now, yes, of course, you have to keep in mind the requirement of SA 700, which is forming an opinion and reporting on financial statements. Yet, if there are certain observations which are of qualificatory nature, which affect his reporting, then those are to be considered. Any elucidation providing further information or throwing extra light on any observation or qualification, disclaimer, etc., is also required to be stated, because ultimately it is the auditing. Auditor may have difference, then there can be a cases where there is a difference of opinion. You treat as a capital, or client treat as a revenue. You treat current years, client doesn't take off current year. You feel that this estimate is adequate, this is not adequate. So there can be the various issues where there's a difference of opinion. So in those cases also, and whenever there's a huge gap of years between the date of merger, demerger, and date of order. So generally, what happens in case of merger, demerger, amalgamation, etc., the date which is taken to be the date of merger, demerger, and the date of issuing order by the appropriate authority also requires some kind of, adjustments. So those are the cases where these four words will be of use to you. And financial statements of the merged, demerged entities are not required to be audited, because ultimately, when after the merger, there comes a consolidated. So, a issue of 3CB. So, whenever you have to take up the figures from the unaudited entity, then that can be through certification of the financial statements prepared up to that date. So, because these all are some special features which you may come across while certifying, or while providing true and fair, true and correct details pertaining to the tax audit which you have taken up. Therefore, the law purposefully has used the words observations, comments, discrepancies, and inconsistencies. And then again, I've tried my professional judgment for your benefits. Now, what is observation? What is the difference between observation, comments, discrepancy, and consistency? Observation is an act of noticing during the course of your examination, or perceiving, or providing factual insight, which are objective, which are objective. Like how you are treating one information in one particular manner is an observation. And you will find in this guidance note that wherever at various places, the committee has used the word observation, that the auditor, tax auditor, is required to mention this as an observation in the report. So this is observation, comments, etc., are there to safeguard you. So what you should classify as observation, or comments, or discrepancy, or inconsistency, for those purposes, this slide is all about. Then similarly on comments, it is expression of thoughts, feedback, and are subjective. And comments is consequence to the observation. So observation has to be made, then only you will decide whether this observation is a comment, can be satisfied with the comment, or to classify it as discrepancy or inconsistency. Then discrepancy, it is a factual or objective difference of deviation from accuracy due to error or mistake. Inconsistency, where there's a lack of uniformity, because consistency is the basic of the accounting. If the consistency is not because of because of some unfounded purposes, then you have to mention that. So this was just to introduce you the basics of the auditing. Now, as I told, there's a revision of the report which is allowed. Of course, you will have to generate new UDIN, and you will have to give a reason why you are revising it. And there's no restriction. As per me, there's no restriction for the number of times for revision of tax audit. But of course, you will have to mention the purpose or the reasoning behind such revision. E-filing utility permits insertion of comments under the heading Others in the tab. This is for your clarification. Now, basic clauses 1 to 8. The auditor should obtain from the assessee the statement of particulars in form number 3. As far as basic details are concerned, you have to get, or alternatively you prepare and then you get it signed from the client, and with the note that in confirmation of the facts and figures quoted herein, the Ind AS, the AS guidance, etc., issued should be followed. This is without saying, because SS 700 is applicable to you. If there is a difference of opinion, that then state both of the viewpoints. That is the observation where you can mention it, just not the notes of account only. You can also, suppose the client doesn't agree for including certain difference of opinion or certain matters in the notes of account, then this is the exclusive right available to you because you are issuing your report. You can decide what type of mention you have to give in the report as an observation, etc. Now, coming one by one, quickly attending because these are general points. I'll try to save time for the detailed discussion. Now, name of the assessee. Whether, like suppose I'm proprietor of XYZ firm, then I am not auditing individually. Then what should I do? Should I mention the trade name? Or if I'm auditing a branch, then should I mention the branch? See, point is Form 3CD because it is factual. So therefore, the name has to be the one whose books of account you are examining. Many times it happens that somebody is a salaried employee and he is also a proprietor of a business. Then what to do? Then it is a trade name which you will use. Sometimes it happens that there are salaried employees who carry on use share transactions, which comes within the definition of business and profession. Then in that case, you have to use his name, but within bracket, you can mention shares activities or shares business or just shares. So, PAN will remain same. If person is proprietor of n number of businesses, then his PAN number will remain same. But that does not mean that you are auditing all the information. You may be, suppose one business is in Jaipur, second business is in Chennai, or somebody, or third business is somewhere else. Like to get his tax accounts, tax audit report prepared by other persons. So your responsibility is only with the reference to the books of account you're examining, and you also provide your observation, as to what you have audited or what from the data is being taken to. So name is just not that way. If name is changed during the year, then what to do? Then because this is at the year end, so the name which is changed has to mention in even the Revised Companies Act. You have to mention the erstwhile name of the assessee. Then what if the name is company is merged or amalgamated? See the position. If from certain date the existence of that company is extinguished or it gets submerged into the new entity, then in that case you have to see the company which is surviving, and of course you will give in observation the mention that till from this date to that date what was the status and how you have compiled the observations or the financial results of that organization into this new organization, which is a consolidated organization now. What if a professional has a different trade name for any business? Again, because it is a business to business reporting. Therefore, if there are three businesses with three different names, then you have to mention all those three different names because there may be a requirement of separate registrations under the different act or rules or regulations. So, and maybe the books of account also will be different. So you have to mention those that particular name. It is also relevant because nowadays maximum data is through computer. So even a very small mistake with spelling will not you will not be able to fetch the data. So mentioning of the correct name, trade name, is that way essential. What if a person dies intestate and business is taken over BOI? Somebody asked me this question. Somebody was proprietor of X firm, died intestate, that is without leaving a will. Who will inherit his organization? Then the law says that body of organization will take over the business. Then in that case, the body of organization which has now come into existence will get his pen, and then in that it will be reporting. And in that, because at the end there is a continuity of the business of the erstwhile, which he was the proprietor, will be merged into the. So it will be in the name of the body of individuals. Change in name after year and before signing. Suppose there is a change in the name, which is after the date of balance sheet, and but before signing, then you will mention the name which was prevalent up to the date of the year ending, but you will also but you will mention in observation that subsequent to the financial year ending there is a change. So these are some cases which practically we encountered during the course of our practice, and those are the views which we have taken and which I think I thought that I should take up for the for your consideration. So name should be as per the pen. What if there are two pens? Suppose inadvertently, due to mistake, two pens have been issued, have been got applied. Then obviously, the pen which you are not using becomes defunct. And as tax auditor, you have to check whether the assessee has applied for discontinuation, surrender of that pen, because even otherwise that is punishable under the law. So just check up whether the pen which is allotted to you, and you're also required to keep a copy of the PAN with you, because this is a permanent document. In case of branch, yes, because the books of account which you are auditing, you have to mention that. So they do mention that you are auditing the branch. Then if there's a change between, then address means what? Address which is as per the original PAN which is applied, or address as per the profile. So generally what we see that when you open e-filing account of any SSE, then whatever data which he has fed into that e-filing profile will be used by the tax auditor. And he can have a copy of the screenshots and other things, and in support of that, he has verified the detail, and address is communicated by the assessee to the income tax department will mean what is there in the profile, if otherwise information is not available. The PAN report is mandatory, and the Aadhaar is also allowed to be reported. Suppose PAN is not available, like sometime like it may happen in cases where somebody has just started a share business, and his reporting has come to a point, and there may be some other regions. So those cases, if the PAN is not available, the due date is coming, then you can upload the report by quoting the Aadhaar. If multiple registrations are numbered, then report of sale. Then suppose in that case, like in case of GST, if person is having offices at different states, then he has to obtain separate registration for each of such offices. Then in that cases, those all different registration numbers will have to be applied. If suppose he is covered otherwise in the other acts, excise, maybe customs or elsewhere, or wherever there's no requirement, then still the transactions are internal transactions, then IC code will have to be reported. So the idea is that because you will be quoting a lot of information in your Form 3CD, so you have to provide your income tax officer the code numbers, the registration number, because by using which he can retrieve that information and can have an independent second examination. You have examined, reported on his behalf, all right, but then you have to mention that for which registration number you have used, which number you have used, etc. So for that purpose, it is also relevant. The reporting is to be done as specified e-filing utility in this context. Now address, which as I've shared, that if the company name is changed, then use the name which was at the year end, and mention the name which was changed. Then in case of merger, demerger, amalgamation, etc., if one company ends, then its reports, its facts and figures will get merged into first. If a person dies intestate, this I've mentioned, and address on financial year ending or date of signing. So address on the date of signing is relevant, as address at the date of financial year ending is not that relevant. And whether the assessee is liable to pay indirect taxes, like in clause number 3 and 4, the word law has used is that whether the assessee is liable. If he is liable to pay taxes under the different acts or different streams, then he must have been allotted some registration number also. So that registration number you have to mention, and that registration is unique. Then status, section 2, subsection 31 of the income tax is relevant here. Like suppose if a firm during the year a firm becomes company, then what will be the status? See, again, if the firm has closed its business up to a certain date, and thereafter the firm has become company, so if it is a continuation of business, that all depends on how the main clause of the company has been framed. So if there's a continuation, then we have the established law that the profits of the business accrues at the year end. So if the business continues, then changing of the name, changing the status is merely a continuous process of the law. and it will not affect the financial, reasoning. But then you have to use your professional judgment, because if the taxation rates are different and other issues may come up. So previous year, if the previous year is other than 1st of April to 31st March, year ending will always be on 31st of March. But from the beginning date will obviously begin from the date when the organization comes to in existence. For assessment year, as you are aware that from next year the new Income Tax Act will come into effect, and I would like to draw your some may have a feeling that these certain provisions of Income Tax Act will cease to apply. So for them, I would like to attract their attention to Section 536, which grants the earlier act, which is Income Tax Act 1961, an afterlife through the doctrine of repeal and savings, meaning thereby that whatever proceedings which have been initiated up to the date of applicability of the new act will be valid, will be live, and for those matters you will have to use the earlier law. Then clause number 8, which is the last as far as the fact portion is concerned, it asks you to indicate what is the relevant clause of 44AB under which your auditing has been conducted. So if it is clause A, which is 1 crore or 10 crore, 10 crore, when the receipts and payment transactions are not more than 5% of the total transactions, you have to consider all kind of receipts, whether capital receipts or revenue receipts. Just consider the debit or credit side. If debit credit side receipts and payments are not in excess of 5%, then the threshold limit is 10 crore, other which is 1 crore. For professional, which is clause B, it is 50 lakh. Next year, these limits are going to be 1 crore from 1 to 2 crore, 50 to 75 lakh. And then for 44 AV, 40 BV, and 44 ADA, 44 AD, etc. So you have to mention that under what sub clause the audit is being conducted. Then there is special provisions, I mean special taxation schemes, which is 100 BAB or BAC, etc. These are the just points. I'm just passing them. Now let us come one by one to the issues. See, controversial issues which are clause number 9 says that profit sharing ratio has to be mentioned. I may share with you that there could be a situation where the profit sharing ratio in case of profit is different and loss sharing ratio in case of loss is different. There can be a question. We had a situation. So profit means that the loss is what? Loss is negative profit. There are decided cases the loss is what? Loss is negative sharing. So if for firm and association person, when we are indicating the names of partners and members, then you have to mention the profit as well as loss sharing. If there is any change in partners, members, and profit sharing ratio since the last definition, the particulars are changes. If there are changes, because those changes will affect the calculation of the remuneration, calculation of the profits and losses to be divided amongst the partners the year end. So therefore, there is a change, then you have to mention. The idea is that income tax department should be kept informed. Like in case of property sale purchase transaction, the registrar office is kept in loop so that any property has a clear-cut trace of what has happened from A point to Z point with the documentary evidence of all the relevant parties. Similarly, income tax department do also want that when we have allowed a PAN number, when we have allotted a PAN number to an assessee, then we want to see that what changes in that in that status of the assessee has occurred. So profit and loss sharing ratio, you have to keep them informed. And this is also relevant because suppose there is a demand or huge demand, then it will affect the rights of the income tax department. Then clause number 10, nature of business. Then each business has to be mentioned along with the sector, subsector, or if you have also included the job basis work in your organization. Then there's a substantial change. That, like, what happens that many times due to recession or due to obsolescence of product, you may decide, or due to capital problems, you may decide not to manufacture your own goods. You may decide to work on job work basis for others. So it basically changes the nature of the business. Then you have to mention that. Then similarly, there can be wholesale business, retail business, because in all such cases, it is going to affect your GP rate, gross GP rate. So as far as that is concerned, it is required that that you should mention the nature of the business. Year to year consistency will also be checked with these details. And as far as the for coding is concerned, I draw your attention to Appendix 16th of Guidance Note, which provides listing of codes. If there is any change in the nature of business profession, the particulars of the changes may occur. And suppose there is an expansion of the business, new line of production has been added. No need to mention that. But if there's a change in the activities of the business and then new line has been added, then yes, there will be a mention, because it will affect. It is not necessary that with every expansion your cost will go down. Maybe that in some cases with the expansion your cost can go up. Similarly, in case of reorganization, reconstruction, restructuring, etc., these are which is it is a material information which your assessing officer should know through you. Why through you? Because you have checked the accounts, you have the access to the facts. Then controversial issues, as far as books of account is concerned, what prescribed books have been maintained? The definition given in section 2, subsection 12, capital A is inclusive definition. It doesn't say that books of account means this and this only. It said that books of account includes this and this thing. So the definition is inclusive. Then what books of account maintained? What is generated? Now, this generated is very important word. Does generation means print out? Because I have to draw your attention to the provisions of Information Technology Act 2000, which says notwithstanding anything contained in any other act. That means the procedures given in IT Act will override the provisions of provisions of Income Tax Act as well. So a list of books of account maintained will have to be mentioned along with the address at which they are kept. And not only that, if they are maintained in computer system, then you have to mention what books of account have been generated. Now, somebody asked me the question that does taking the printout in PDF format can be called generation? According to me, yes, it is generation of the books of account. Somebody asked me that whether taking a backup on CD-ROM on which no correction can be made, can it be called to be generated? Yes, it can be said to be generated. See, we have an audit trail approach. Why do we have audit trail approach? Because the law wants that what you have audited on a particular day and given your report, then books of account are the same books of account which the officer also would like to check. So unless the books generated by you, audited by you, are made available to him for examination, he will then you both will not be on the same ground. So generation means you have to keep in your mind what you have checked are that set of books which is made available to AO for the examination. Plus, it will have a digital imprint. The generation is at subsequent, and it can challenge the very authenticity of the data which you have audited. So you have to make sure that what you are auditing is ready at the point of time of audit, and that your results, the financial year ending results are generated from that data, and that data and the copy of that data is kept by you for your reference and those things. So similarly, books are not kept at one location, then as you mentioned, then again what you have examined. And now what is maintained? Maintained is written form or in electronic form or in digital form or print out of the data or in such electronic form, digital format and floppy, etc. Similar generated that I've discussed. Location will also include IP addresses. Examination is what? This is important. Verification and examination. Verification is like confirming the truth, correctness, taking from A place to B place, correctness. Whereas examination is more detailed and that includes verification. So examination is more detailed and thorough inspection and analysis, and an examination will include verification. Now, last is clause number 12. It says that if your profit and loss account includes any profits and gains whose figure have been taken on presumptive basis, because it is generally presumed that books of account you are auditing to is based on the regular day-to-day level maintained books of account. So if you say that you have audited a particular profit and loss account, particular books of account in which section of the income is calculated on presumptive basis, then AO has to see that those expenses which are incurred, which have incurred on presumptive basis type business are not claimed further as a deduction in your regular business account, or that the income is not diverted from this A business to B business. So the mentioning of the facts from your side that the profit and loss account includes certain profits and gains on presumptive basis is required to be mentioned. And then there are sections 44 AD, ADA, AE. So plus you have also, the AO has also to examine that whether 44 AD was applicable. That like 4480, it is to eligible business, eligible SSE, and resident in India. There are three conditions. Somebody wants to apply the provisions 4480 to a private limited company, sir, not allowed. To LLP, not allowed. So for those cases also, they want to know that if on presumptive basis has any results been included, and you have to comment in yes and no, and then you have to mention the section, and that is the requirement. I'm skipping the shipping or other specified sets of cases for non-residents. I feel that not that relevant looking to the number of participants also. Controversial issues, clause number 16. Now, what is clause number 16? It says, I draw your attention to clause number 28 in guidance note, which is on page number 93. It is for your ready reference, and those who are having access to the guidance note, uh, I would request them to go to para number 28, which is there on page number 93 of the exposure draft of the this guidance note. It says that amounts not credited to the profit and loss account. Why will there be the amounts which are not credited to the P&L account? It doesn't say income. It says amounts not credited. So generally, whatever credit which is coming has to be through trading account. Then the result of trading account comes to profit and loss account. Then the result of profit and loss account goes to capital account, balance sheet. This is the general process. But then there can be certain type of receipts which may not go directly to the income to the profit and loss. For example, like value or valuation of perquisites. Now, perquisites or value is because of deeming fiction of the law is treated as income of the SSE. And there is a specific provision in section 28, subclause 4, and there's a TDS section 194 capital R, which deals with such issues. So in those cases, you have to, that TDS is deducted by the companies who are providing this valuation, the perquisites, etc. You have to include that in the Form 3CD, because this is something which has not been created to P&L account, but yes, it will be included for the purpose of taxation. It will become part of the computation of total income. Then similarly, there are government benefits, which I call them pro forma credit, drawbacks, refund, etc., etc. Once they are admitted as due, because right to receive comes when they are admitted as due by the authorities concerned. Then similarly, escalation claim is based on contracts, any other item of capital. On the next slide, I have discussed these in detail. Like everywhere I've done that. On first slide, I've discussed the clause, and thereafter I've included the specific the points where I want your attention. Like in case 14, it is to be given with respect to the entries in the books of account and records which are made available. Something has not been made available to you, like I said, presumptive taxation, like I said, the duty drawbacks or other records whose papers may not be available, or some other details, then speculation business, etc. So you have to give your details only with reference to the records made available. Then items reported in 16B, CD need not be reported in clause A, because when there's a specific subclause for those things, then you have not to be included in the general clause, which is 16 capital A. Then value of perquisite, etc. The question you have asked, which you have to ask yourself as a tax auditor, is whether it was money convertible, or whether it was like, many companies have a scheme that if you do this thing, then the foreign trip is allowed. If you don't want that foreign trip, then this much of the compensation will be allowed. It's called money convertible. The government benefits admitted as due escalation claim. Capital receipt means any receipt, but which is of the nature of income, not the loan accounts, not the capital transactions. So controversial issues where where there's a sale of land and building transaction. This issue I'll take up later when this 43 CA etc. comes, because there's a recent judgment which says that leasehold rights are not land and buildings, and it will affect not only section 56 but also section 43 CA and 50C. This is a very interesting case. I've given a separate details in that slide, so I'll take up that. So what clause 17 takes up, it asks you the information about the details of property, consideration received, value adopted for the purpose of stamp duty, and 57, 53, etc. Now, what constitutes land or building, whether leasehold rights, development rights, TDR, FCI, FSI would fall under these provisions or not? There are difference of opinion. But recently, in a judgment by Delhi IT80, it was held that Section 56, subsection 2 applies only to land and building, not to leasehold rights. My dear friends, it has opened a Pandora box for all of us. It is beneficial, it can be used. The appeals wherever you have filed, you should alter your grounds of appeal, and you should take benefit of it. Then, of course, yes, the guidance was already required from you to use your professional judgment to decide in such disputed cases. And also, I would like to mention that in this IT80 judgment, the Delhi IT80 bench has invoked the provisions of vegetable products, in which the Supreme Court has held, that there's a difference between land and building and leasehold rights. And this is similar to, earlier we had a difference. Then what is share capital money, or what is share application money, and what is loans and advances? So all three terms are different. You cannot just treat all the three credits on the same wavelength. And similarly, section 43 43 CA applies where the assets is other than capital asset. 50C is contrast. It applies to a capital asset. But in both the cases, it restricts its applicability to the land or building only, both. What if more than one property is transferred? Then you have to give a combined view. What if agricultural land is transferred? The agricultural land is not a capital asset. Suppose it meets all the conditions of 14. Still, you will have to mention it, because the question which has been asked from you is that whether any land or building or both is transferred in the year. Agricultural land is a land and building, and it doesn't say whether the such transfer will be taxable or not taxable. It wants you to report. So to my mind, as for my view, even if the agricultural land which is not falling within the definition of capital, still you have to mention those. Then I am coming up to another two sets of sections, which is clause 32 and 34. Brought forward losses or depreciation allowance to the extent available, Whether a change in shareholding, it talks about the shareholding, then it talks about the speculation losses. I will like to take up, now the controversial issues more frequently instead of just going to the provisions to save time. Details of brought forward losses or depreciation. How the loss is to be determined, 32A. As per ITR, and then as modified by the assessment order, as further modified by the appellate order. So you have to see all those things. That means you have access of the e-filing account of the assessee. Then only you can have an exhaustive cases. Then uh, uh, if any assumption is made, then give that in the remarks column. Then determination of carried forward section 80, read with section 139.9. It is also mandatory to keep into account whether the return was filed by the due date, whether it was revised, or whether it was updated return was filed. And if those things happen, then these are voluntary on the part of the assessee. Then what changes it has brought in the in the carry forward and set of proceedings. Then similarly, pending assessment, appeal proceedings, delay in time will have an impact that has to be considered. And regarding depreciation, the famous case of CIT versus Subba Lakshmi Mills, 249 ITR 791 Supreme Court, it is not affected by the number of years. It can be carried forward continuous indefinite period because this is a benefit which is allowable. Then change in shareholding not does not apply to company which is public is substantially interested, 51% when you incur the loss, and when the change when it is being carried forward. So if the idea is that if the purpose is to sell the benefit of the losses, then to plug all, then for eligible startups, the voting power etc. is not challenged, but it is mentioned that those who have incurred losses should continue to have, those shareholders should continue to have the voting power. Similarly, beneficial ownership is considered and not the registered ownership. Then for speculation losses, again, the speculation losses of businesses to be set off only from the other speculation losses. What is important here to consider is that the hedging transaction, job being arbitrage, derivative, etc., they are not deemed as speculative transactions. So do verify the type of speculation which your assessee has entered into. Then speculative transactions, or the meaning is very famous, which is ultimately intended to be settled otherwise than by actual delivery or speculation transactions. And interesting is that speculative profits can however be adjusted from the losses of other businesses. And there's another the very interesting case. I will come in explanation when I deal with the explanation. Details of losses incurred in respect to specified business. For a specified business, continue the same business is not necessary. It has to be specified business. Same business is not necessary. So specified businesses, which is described in the section 35 AD, will be the cases where the loss from this will be allowed to be set off against the other specified business. If someone carries more than one specified business, then those losses have to be shown separately, so as to have checking off, linking of those specific losses with the specified business. Then this is important that details of speculation loss, if incurred from deemed speculation businesses, is referred into explanation to section 73. Put it simply, if there is a regular and known share type business, the act says that which is the business which is not having income from house property or regular business or capital gain or other sources, etc. So I term it as, say there's a regular and known shares type business. Then purchase and sale of shares of other companies type of activities are taken up, then it shall be deemed to be the carrying of a speculation business, because your company is for running a regular business. And if you are doing shares and sales in that company, then it will tend to amount to carrying on the speculation business. Sometimes clients come out with an idea that, sir, we are running a business. What if We also carry on the business of purchase of shares and sales, and so that losses of that business can be set off from this business. Then that is a risky planning. Controversial issues, clause number 34, 32 we have covered. Now 34, whether the assessee is required to deduct so you have to mention first whether the requirement of TDS TCS applicable. If it is applicable, then whether timely it has been deposited, whether in all cases it has been deposited, and if the data voluminous, you can apply test check. Then TCS provisions of 206C 1H are not applicable with effect from assessment year 25-26, which expenditure any amount thereof results into benefit. A written representation has to be taken, WR written representation taken from the client, and TDS requirement of 194I to be seen whether it has been complied. And regarding this applicable section 194BA should examine rule 123. Then clause 34, this B clause B of 34 is concerned. Whether the required statement was furnished in time, you have to reconcile that disallowances reported in the form 3CD along with the disallowances which you are reporting 40A. So they have to reconcile 34A or B with 40A. And similarly, all transactions required to be reported furnished. If there's any deficiency in the content, the required to be obtained relevant statement involving special information, then significant deficiencies with remarks can be reported with appropriate remarks. Similarly, 201, this is regarding calculation of the interest. If the date has been, and you have to refer 26 AS, AIS, TIS, etc. also for the cross verification of the interest. Then similarly, non-provision of interest, if not paid the 31st of March, then provision, this is important. If you have identified that tax was deposited delayed, then interest has arisen and the liability to pay has arisen. So you have to make a provision for the interest payment. You have to pay. If you have not paid, then do provide. Otherwise, it will affect the true and fair view. My view. Then clause 30, clause 40. Now, clause 40 is regarding turnover, some ratios, turnover. So definition of turnover is very interesting. You have to refer paragraph 5 guidance note. I will take up some very important issues relating to turnover. And net profit is stock in trade. Stock in trade means finished goods only. And net profit means excess of revenue, metal consumed required if the manufacturing, and that too with respect to all principal items of manufacturing. Now, turnover has been attempted to be defined in section 2, subsection 91 of the Companies Act 2013, which is of relevant. And in glossary of terms used in financial statement, the ICI is also quoted the definition of sales turnover in the guidance note, para 5. Then what to be deducted from the turnover? So like trade discounts, cash discount, special rebate. So a lot of technical terms which is used by the business world has been discussed one by one by the in the guidance. But I find them very useful, and I draw your attention to go through with them. Of course, sale proceeds of fixed assets would not form part of the turnover. So there is a specific clause also which says what will not be included. So similarly, speculative transaction, because of what is the difference? Because the speculative transaction, the turnover may come to thousands of crore in a couple of days. And it has been defined that aggregate of both favorable and unfavorable differences will be treated as a turnover for the purpose of levying turnover tax or for the purpose of other things. And delivery based transactions, total value of the sales is the turnover in case of delivery based transactions. Similarly, other important things is that purchase, sale of stocks of shares undertaken whether in the course of business or investment will be relevant. If the transactions are in the nature of investment, then they will not be part of the turnover. Gross receipt is also not defined, but the gross receipts, like in case of lawyer, chartered accountants, if suppose the fees is X amount and then they also charge 10%, then 110% will be part of the turnover, part of the gross receipts. But if they raise a separate bill for the reimbursement, then it will not be part of the receipts. There was an interesting case discussed in 5.17. A professional was there earning 54 lakhs from profession and 72 lakhs from the business. Whether audit was required? Yes, audit was required because not only 54 it got attracted, but clubbing too, because both will be taxed under the head business and profession. So the provision section 44 AB came into force. Similarly, regarding details demand raised, yes, like in case of companies, you will say that the listed companies, the company has to report within 24 hours to the SEBI as per the condition of this listing law of arising of the demand. So I think that's the best platform in case of companies. If you want to know that what kind of demands have been raised on the company, the demand, even if it is of 1,000 rupees, then still the listing agreement requires that demand note to be uploaded and to be informed to the SEBI. So, there can be, apart from the e-filing platforms of various acts, you can have an access to what kind of demand has been generated, and then use your professional judgment to cross-verify the demand from online portal of the demands. Any adjustment of the demand or refund against the demand should be also be reported. Because once you file the return, then some demand is to be demand is raised, then it has to be recovered. And suppose it is recovered by way of writing off or by making adjustment against the refund dues to you, then you should have a clear accounting, because adjustment is nothing but payment. Similarly, disclosure of contingent liabilities in the audited financial accounts and disclosure in statutory report is to CARO. And then there's a format which I found useful to refer here in this slide. This is there in the guidance note. I draw your attention to whether the assessee is required to furnish a statement in form number 60, 61, etc. You have to mention yes or no. If yes, then you have to provide certain other information. With reference to clause number 42, you have to obtain ITD REIN, which is Income Tax Department Reporting Entity Identification Number. This all is nothing but the collection of database from the various reporting agencies or wherever the transaction is occurring, and then creating a profile of the assessee. This entire information is PAN based. Like you have you purchase foreign exchange, you deposit cash, you make cash payment, you buy jewelry, you buy property, you sell property, and various transactions, you have to mention your PAN number. So this all kind of creation of the reporting entities. The data is coming to the income tax department, which they want the chartered accountants to use to process free of cost. So I would request all the viewers to think about what fees they are charging and what duties have been cast upon you. And date of actual furnishing also report is to be mentioned, etc. I think with this I have done with the presentation, and I would love to discuss the in generality, because the time is also just through it. See, what I have tried that through this slide, I have tried to raise as many questions. The time was not that I would have dealt them in details. Yet, however, if those issues are taken up by you and at appropriate of time, I think the institute and we both can come up and can discuss those issues. With this, I'm open to have questions, though the time is too less and the participants also less. So over to you, Varunji.
Yes, sir. It was a valuable session, sir. There were few questions which I ask you. Yes, sir. First question is from Suraj Kumar Chaudhary. He is from Katihar. What if name is minor difference in name, such as particular spelling mistake in a particular word?
Right,
Means,
good. And maybe sometime what happens that because of that there can be different name in bank. We have seen that the PAN number of the director is used by the company, the bank branches, to open a PAN of a company, because sometimes it happens that they have very good relationship with the bank. So maybe in those cases you have to mention it, but ultimately it has to be one by one same. So use the name which is as per PAN.
okay, sir. Second question, address as per PAN or registered office, which is now changed but updated in PAN. Which address to taken, sir?
Updated PAN address has to be taken, even if it is not updated in the PAN, but it is updated on profile, e-filing account profile, then that should be referred to. And for as an abundant precaution, which I don't suggest, but as an abundant precaution, if you want, then you can give a mention in the observation.
Okay, sir. Third question is, books are centralized at HO, but some of it, such as vouchers, cash banks, etc., are also maintained at branches. At the same time, separated standalone financials was signed for internal purpose. Whether books maintained as HO only can suffice or maintained at branch is necessarily to be shown.
What you have mentioned, what you have maintained in the branch is only the secondary set of books of account supporting or the relevant documents. So, they can be relevant for examination of the information in the books of account. So therefore, books of account maintained and HO will be called to be the books of account, which is to be examined by the tax auditor, whether physically or through electronic means.
Okay, sir. Next question is from Hemant Rathi. He is from Khamgaon. Some clients are still maintaining books of accounts manually. Whether need to report the same in tax audit report?
Books of account will be maintained. Then you have also to mention where if maintained in computer system, then how you have generated the books of account from that system on CD-ROM, PDF, or on changeable media, all other things.
Okay, sir. They have to mention in observations.
And they have to mention in the repo form 3CD itself. In case they have been maintained in books of account, because provisions of IT Act 2000 has surpassed the provisions of Income Tax Act. It has allowed books of account to be kept in digital format, electronic format, or suppose they are links. The data is hosted on server. Then you have to mention IP address.
Okay, sir.
Next
question.
Main IP address, not the backup server address, etc.
Okay, sir. Next question is from Sujata. She is from Chennai. How to determine turnover for speculative share dealings like day trading and in case of FNO trader?
Of positive and negative. I mean, the institute, the guidance is very clear about it, and I also mentioned in the in my slide.
Yes, sir. You have mentioned it. Yes, sir.
Yeah.
Next question: whether to include Ind AS adjustments or not in clause 13?
See, like I say specifically, I draw your attention to revenue recognition, AS9 and Ind AS 115. It requires that you have to adjust. The basic provisions of SA 700 applies here. So, which requires that whatever information that you are giving have to be adjusted.
Okay, sir. That's all from question and answer, sir. Thank you, sir, for the detailed insight into tax audit clauses and its practical relevance. Appreciation to CPC of ICI for organizing this session and to all participants for joining and making the discussion lively. Looking forward to our next session together. I want to tell you, as of now, we have 675 registrations.
Oh, I see. I see.
Yes.
I see. Fantastic. I think it will be very useful for me if more questions come, and you can share with me.
Yes, sir. I will share you.
Thank you.
Whenever it
Thank
comes, I
you.
will share you.
Thank you.
Yes, sir.
So I'm switching off my video.
Okay, sir. Now we move to our next session. Our second speaker for today's section is CA Surinder Singh Dhakar. He is a senior partner of the firm in Jaipur since 1996 with specialization in statutory audit, internal audit, management, and system audits, tax audits, company law matters, GST, and business planning. He has been a co-opted member of one of the key committee of ICI and has contributed to various ICI initiatives, including study groups and publications. He has delivered lectures at ICI orientations and GMCS programs, study circles and seminars, and also has served as a guest faculty at University Law College, Jaipur, and the Institute of Cost Accountants of India. He has written professional articles for ICI newsletters and actively participated as a career counselor for the Chartered Accountancy course during the profession, promoting the profession among students. Over to you, sir.
Thank you, Varun ji.
Yes, sir.
First of all, I would like to thank the chairman, CP committee, our own CCM Satish Gupta ji, vice chairman Vishnu ji, for taking this topic in the webinar of standard of auditing. स्टैंडर्ड ऑफ ऑडिटिंग, ऑडिट हमारा एक कोर प्रैक्टिस का एरिया है, लेकिन स्टैंडर्ड ऑडिटिंग सबसे कम डिस्कस किए जाने वाला एरिया है। जितनी सेमिनार्स हैं, वेबिनार्स हैं, आपको इनकम टैक्स पे मिलेंगी, जीएसटी पे मिलेंगी, टैक्स ऑडिट पे मिलेंगी, लेकिन स्टैंडर्ड ऑफ ऑडिटिंग पे जो है आपको बहुत कम सेमिनार्स और वेबिनार्स हमको मिलती है। तो सीपी कमेटी ने इसको ध्यान दिया है। बीच में स्टैंडर्ड ऑडिटिंग पे सीपी मैंडेटरी करी थी, लेकिन आफ्टर सम टाइम ये अब वापस से रिकमेंडेटरी हो गई हैं। तो स्टैंडर्ड ऑफ ऑडिटिंग पे हम कुछ स्टैंडर्ड्स को और डिटेल्ड में नहीं और समराइज व्यू में तरीके से देखेंगे कि भाई जो इम्पोर्टेंट जो स्टैंडर्ड ऑफ ऑडिटिंग हैं वो उनको हम डिस्कस करेंगे। Standard of auditing is very much important for all kind of audit, whether is the statutory audit, whether is the tax audit, whether is the internal audit, whether is the concurrent audit or any specific audit. As a chartered accountant, we have to conduct the audit in accordance with the standard of auditing prescribed by the ICI. अब बात है कि why the auditing standards are important. Auditing standards are mandatory to be followed by the practitioners under the direction issued by the Council of the ICI. And if not complied with the auditing standard in performing assurance engagement, the chartered accountant shall be held guilty of the professional misconduct under Schedule 2nd of the Chartered Accountant Regulation Act 1949. Also, as per Section 143(9) of the Companies Act 2013, every auditor shall comply with the auditing standard. तो हमको ये देखना है कि ये ऑडिटिंग स्टैंडर्ड्स हैं, ये हमारे लिए कितने इम्पोर्टेंट हैं। हमको हमारी जितनी भी ऑडिट करनी है, हमको 100% हमारे स्टैंडर्ड ऑफ ऑडिटिंग्स को फॉलो करना है और उसके हिसाब से हमको इनको आगे बढ़ना है। हम ऑडिटिंग स्टैंडर्ड्स के एक जो ब्रीफ हिस्टोग्राफिकल बैकग्राउंड है उस पर हम चर्चा करें तो 1955 में सबसे पहले आईसीआई ने रिसर्च कमेटी कॉन्स्टिट्यूट करी थी फॉर डेवलपिंग अकाउंटिंग एंड ऑडिटिंग प्रैक्टिस। इन 1964 पहली बार जो आईसीआई की रिसर्च कमेटी थी उन्होंने स्टेटमेंट ऑन ऑडिटिंग प्रैक्टिस एसएपी इशू किए, यानी कि जो पहला सेट ऑफ स्टेटमेंट ऑफ ऑडिटिंग या स्टैंडर्ड ऑफ ऑडिटिंग आया वो 1964 के अंदर आया। 1977
Really sorry to interrupt, sir. Actually, there are many participants from the south of India who are requesting to keep the communication medium as English itself, sir.
Okay.
Really sorry to interrupt.
In 1977, IPAC constituted by IPAC and institute issued International Auditing Guidelines (IAG), later known as the ISA International Auditing Standards. In 1982, Auditing Practice Committee constituted by the ICI for to spare at the framework of SAP and guidance notes. In 2002, Auditing Practice Committee renamed as AASB, Auditing and Assurance Standard Boards. SAP renamed as AAS, Auditing and Assurance Standards. In 2008, nomenclature of AAS known as the Engagement and Quality Control Standards, आपका it is SH, SRE, SAE, SRS and SQC. So this is the brief historical background of the auditing standards. Why these auditing standards are required? I try to summarize some important audit procedure. SA 300, it is the preliminary engagement of audit and planning of the activity. The reference is the client continuation SA 220, ethical requirement SA 200 and SA 220, terms of engagement SA 210, SA 315, risk assessed procedures, SA 330, performing of test control, performing test of detailed substantive procedures, SA 450, evaluation of misstatement if identified, SA 700, forming an opinion based on the audit evidence obtained, SA 705, modification to the opinion in the independent auditor's report, SA 706, emphasis of matters paragraph and other matters paragraph in independent auditor's report. So these are the some important essays which are to be followed during the audit procedure. Now, one by one, in brief, we will try to cover some standards. The first standard is the SA 200. There is the series of the essays 200 series, 300 series, 400 series, 500 series, 600 and 700 series. So the first standard of auditing is the SA 200. SA 200 is the overall objective of independent auditors and the conduct of audit in accordance with standard of auditing. This is basic principle governing an audit. The SA 200 is the basic principle that this standard is established that independent auditor overall responsibilities when conducting an audit of financial statements in accordance with standard of auditing. Now, what are the ethical requirements relating to an audit of the financial statement? The auditor should apply the following fundamental professional ethics, which are relevant when conducting the audit of a financial statement. The important, the integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. These are the 5 ethical requirements for the audit of the audit financial statement. Next, the professional skepticism to be used by a auditor while conducting the audit. The professional skepticism include being alert to, for example, the audit evidence that contradict with the other evidence or another audit evidence obtained by the auditor during the course of audit. Information that bring into question that reliability of document and response to inquiries to be used as audit evidence. Condition that may indicate possible fraud. Circumstances that suggest the need for audit procedure in addition to those required by the standard of auditing. So we have to use our knowledge. We have to apply our knowledge while conducting these audit when such type of situation arise during the audit. Then the professional judgment. Professional judgment is necessary in particular regarding decision about materiality and audit risk. The nature, timing, extent of audit procedure used to meet the requirement of a standard of auditing and gather audit evidence. Evaluating whether sufficient audit evidence has been obtained and whether more need to be done to achieve the objectives of the standard of auditing. The evaluation of management judgment in applying the entity's applicable financial reporting framework. The drawing of conclusion based on the audit evidence obtained. We have to check the reasonableness of the estimate made by the management on the financial statement. So, what are the sufficient appropriate audit evidence and audit risks? To obtain reasonable assurance, the auditor shall obtain sufficient appropriate audit evidence to reduce audit risk to acceptably low level, thereby enable the auditor to draw reasonable conclusion on which base the auditor's opinion. What is the sufficiency and appropriateness of the audit evidence? Audit evidence necessary to support the auditor's opinion. Whatever the opinion drawn by the auditor, whether it is the unmodified opinion, whether it is the modified opinion, whether it is the emphasis of matter, or whether it is the other matter, the all time the opinion of the auditor should be based on the evidences, which is based on the report and evidences collected by the auditor during the course of audit. Sufficiency is the measure of the quantity of the audit evidence, while the appropriateness is the measure of the quality of the audit evidence. We have to check whether the audit evidence is the appropriate to check the quality of the audit and to check the quantity of the evidences also. And what is the audit risk? Audit risk is a function of the risk of material misstatement and detection risk. The risk of material misstatement may exist at two levels. First level is the overall financial statement level, and the second one is the assertion level for the class of transactions, the account balances, or disclosure level. For a given level of audit risk, the accepted level of detection risk bear an inverse relationship to the assessed risk of the material misstatement at the assertion level. We have to conduct the audit in accordance with the standard auditing. While we conducting the audit, the auditor should every time should comply with the standard auditing relevant to the audit. An essay is relevant to audit when the standard of auditing is in effect and circumstances addressed by the standard of auditing exist. The auditor shall have an understanding of the entire text of standard of auditing, including its application and other explanatory material. To understand its objective and to apply its requirement properly, auditor shall not represent compliance with the standard of auditing in the auditor's report unless the auditor has complied with the requirement of this essay and all other standard of auditing relevant to the audit. It means if we have to comply all the standard of auditing. If standard of auditing, any one of the standard of auditing is not complied by us, our report will not be treated as the audit complied with the standard of auditing. The second essay we are discussing in brief is the standard essay 210. Essay 210 agreeing the terms of audit engagement. It's very important. Auditor and client should agree on the terms of engagement. Agreed terms would need to be recorded in audit engagement letter or other suitable form of contract. Before starting the audit of any client, any assessee, we have to make an engagement letter. The engagement letter should include the objectivity and scope of the audit of the financial statement. What are the objectives and what is the scope of the auditor for the audit of the financial statement? What is the responsibility of the auditor? What is the responsibilities of the management? identification of applicable financial reporting framework for the preparation of the financial statement, and reference to expected form and content of the any reports to be issued by the auditor, and the statement that may be circumstances in which a report may differ from its expected form and content. Other matters as per the circumstances should be included. So then we have to obtain the knowledge of the business of the assessee client auditing, and then we have to prepare a terms of engagement. The terms of engagement should always be in written. However, it may be oral, but ultimately all the terms and conditions we have to make in writing. In the recurring audits, like it may be the internal audit, it may be the concurrent audit, the auditor should consider whether circumstances require the terms of engagement to be revised. If the auditor and client are agree to change the terms of engagement, then the new engagement letter should be obtained, and auditor and client should agree on the new terms of the engagement. However, in some situations, if the auditor is not able to agree to change an engagement and not permitted to continue the original engagement, the auditor should consider withdrawing from the engagement. Determining whether there is any obligation, either contractual or otherwise, to report the circumstances to other parties, such as those charged with the governance, owners, and regulators. Then it's very important. If we are not agreeing with the terms of engagement, then we should withdraw that engagement, and the reason for not agreeing should be communicated with the persons, with the management who are charged with the governance. The SA 220, quality control for an audit of the financial statement. SA 220 is the exclusive one basically. So as per the SA 220, while conducting the audit, the quality control process, policies and procedures should be implemented at the both level, at the audit firm and individual audits. Both level, we have to implement the quality control policies. To implement the quality control policies and procedure designed to ensure that all audits are conducted in accordance with the standard of auditing. The objective of this quality control policy is to adopt with and incorporate the professional requirement, skill and competence, assignment, delegation, consultation, acceptance and retention of client monitoring. So while prepare the quality control policies, we have to include all this professional requirement, skill and competence assignment in the quality control policies. And those quality control policies of the firm should be communicated to the personnel of the firm in a manner that which engaging in as a engagement team, that so that it provides a reasonable assurance that policies and procedure are understood and implemented. If the engagement team is not able to understand the policies, quality policies, then it will be very difficult to implement the SQC of the firm. To implement those quality control procedures, which are in the context of policies and procedure of the firm, appropriate to the individual audit, to consider professional competence of assistant, performing work of delegated to them when deciding extent of director's supervision and review appropriate for each assistant, The assistant whom work is dedicated need appropriate direction, supervision, and review of the audit performed by them. So this is very important. The now next essay is essay 230, audit documentation. It's a very important. In nowadays, the government is also promoting the Indian Big Four. In last almost 30 years of practice, I have seen what the Indian chartered accountant, particularly the small and medium practitioner firms, are lacking, and that is the audit documentation. Our audit documentation is not up to marks. So we have to enhance the audit documentation. And the audit documentation should be in accordance with SA 230 of the issued by the ICI. The audit documentation or what? The audit documentation that meet the requirement of standard of auditing and specific documentation required of other relevant of assets provide. First, the audit evidence the auditor's basis for conclusion about the achievement of overall objective of audit. And second, evidence that audit has planned and performed in accordance with the standard of auditing and applicable legal and regulatory requirement. Means our opinion should always be based on the conclusion arise from the audit evidence. Whatever your opinion on the financial statement of an entity, that should be based on the audit evidence and or the documentation of those audit evidence we have to make. Audit documentation, what is the audit documentation? It is referred to record the audit procedure performed, relevant audit evidence obtained, and conclusion the auditors reached. Preparing sufficient and appropriate audit documentation on a timely basis help to enhance the quality of audit and facilitate effectively review and evaluation of the audit evidence obtained and conclusion reached before finalizing the audit report. To document discussion of this significant matter with management, to charge with governments and other, including the nature of significant discussion and when and with whom that discussion took place, we have to document it. The auditor may consider preparing and retaining in summary compilation memorandum that describe matter identified during the course of audit and how they were addressed. As in 2020, we have discussed the SQC1. The audit file generally should be completed within 60 days from the conducting of the audit, from the date of signing of the audit. That is our SQC1 is saying. The audit document, the question is how much time the audit document should be retained. The retention period of audit engagement ordinarily is not shorter than the 7 years from the date of the auditor's report. As and when issue the date of auditor report, after signing of that report, we have to keep the audit evidence at least for 7 years. However, in case there is a dispute, then we have to retain the audit document for longer period. The next essay is the auditor's responsibility relating to fraud in audit of the financial statement. It's very important. What is our responsibility in case of the fraud in the financial statement? Auditor is concerned with fraud that causes a material misstatement in the financial statement. There is a two type of the intentional misstatement are relevant. Misstatement resulting from fraudulent financial reporting and misstatement resulting from misappropriation of the asset. However, the primary responsibility of the prevention and detection of the fraud is of the management as well as those charged with the governance. However, it is important that management with oversight of those charged with governments place a strong emphasis on the fraud prevention, which may reduce opportunities for fraud to take place as a deterrent. The auditor is responsible for obtaining reasonable assurance that financial statements taken as a whole are free from material misstatement, whether caused by fraud or error. While auditor may be able to identify the potential opportunities for fraud to be perpetrated, it is difficult for him to determine whether misstatement in judgment area such as accounting estimate are caused by fraud and error. So what is the key responsibility of the auditor in this essay? The first, we have to use our professional knowledge. We have to use our professional ability. We have to analyze and questioning the mind, the critical assess the audit evidence, remaining alert the conditions and indicate the possible misstatement due to the fraud. Then we have to check the risk identification, whether it's due to the fraud or error, but we have to check as an auditor. And then we have to respond on the risk, and that is as per ACID 330. The auditor, risk of auditor, however, is not detecting a material misstatement resulting from management fraud is greater than from employee fraud. Employee fraud may be little, but the management fraud may responsibility of auditor to detect each the more. The better employee fraud, because management is frequently in position to direct or indirectly manipulate accounting records, present fraudulent financial information, or override control procedure designed to prevent similar fraud by other employees. Auditor is responsible for maintaining an attitude of professional skepticism throughout audit, considering the potential for management override of control, and recognize the fact that audit procedures that are effective for detecting error may not be effective in detecting fraud. The auditor shall identify and assess the risk of the material misstatement due to fraud at financial statement level and assertion level for class of transaction, accounts balances and disclosures. Auditor must make appropriate inquiries of the management. Auditor must discuss with the those charged with the governance, as they have oversight responsibility for system of accounting risk, financial control, and compliance with the law. When auditor identifies a misstatement, he should consider whether such a misstatement may be indicative of fraud. If there is such an indication, he should consider the implication of misstatement in relation to other aspects of the audit also, particularly reliability of the management representation. When the auditor identifies misstatement resulting from fraud or a suspected fraud, he should consider auditor's responsibility to communicate that information to the management, those charged with the governance, and in some circumstances, when so required by law and regulation, to the regulatory and enforcement authorities also. So it's the great responsibility of the auditor. While they detect a fraud, they have to communicate with the management. We have to communicate with the person who are charged with the governance, and that if there is a requirement of law regulation to the regulators and the enforcement authorities. The auditor should also obtain a written representation on those matters which have been ascertained by him on the management representation on such kind of the fraud. The auditor should also document the understanding of entity and environment and the assessment of risk of material misstatement, response to assess risk of the material misstatement, and communication about fraud made to management, those charged with governance, regulators, and others. So whatever we are doing during the course of audit, we have to document, and as per the SA 230, the audit documentation. The next essay we are taking is the considering of law and regulation in an audit of the financial statement. The recognize the non-compliance by the entity with law and regulation may materially affect the financial statement. However, it's the management responsibility to ensure that entities' operations are conducted in accordance with the law and regulation. Auditor is not responsible for preventing non-compliance. The auditor is responsible for obtaining the reasonable assurance that financial statements taken as a whole are free from material misstatement, whether caused by fraud or error. Risk of non-detection of material misstatement is higher with regard to material misstatement resulting from non-compliance with law and regulation due to the various factors. To obtain a general understanding of legal and regulation framework applicable to the entity and how it is complied with the framework. After obtaining general understanding, auditors should perform procedure to identify instances of non-compliance with these laws and regulations, whether non-compliance should be considered when preparing financial statement. Further, the auditor should obtain sufficient appropriate audit evidence about compliance with those law and regulations generally recognized by auditor to have an effect and determination of material amount and disclosure in financial statement. The auditor should also obtain a written representation of law. What are our responsibility of an auditor in accordance with this essay? The auditor must obtain the understanding of the legal and regulatory framework applicable to the entity and how it complies with this law. We have to check. The law may be the direct effect law or maybe the indirect effect law. Direct effect law are the impact of the material amount and disclosure in the financial statement, such as the income tax law and accounting related legislation. The effect of the indirect law, the non-compliance, may not be directly affect the financial statement amount, but can have the serious consequences that lead to a material misstatement, such as environment law or labor law. So we have to check the direct law, which are the having the direct effect on the financial statement, and law which are not affecting the financial statement, just as I have already said, the non-compliance of the environment law or labor law. We have to perform the audit procedure to check the applicable law. We have to use our professional statutory, and we have to respond to the non-compliance. We have to discuss with the matter with the persons who are charged with the governance, and wherever it is required, we have also to the reporting regulatory authorities. So this is the SA 250, which is required audit of the financial statement. How we will consider the law and regulation. SA 260. It's very important. The communication with those charged with governance. very, very important. We have to communicate whatever the audit finding during the course of audit. We have to communicate with the persons who are charged with the governance. Auditor's responsibility in relation to financial statement of audit, an overview of land scope, timing of audit, and significant finding from the audit. Such a matter may include overall scope of audit, selection of changes of the significant accounting policies, potential effect on the financial statement of any significant risk and exposure, such as pending litigation, adjustment to financial statement arising out of the audit that have a significant effect of entity's financial statement, understanding material uncertainty relating to event and condition that may cast significant doubt on entity's ability to continue as going concern, disagreement with the management about matters that may be significant to entity's financial statement or auditor's report, expected modification to auditor's report. Auditors should communicate matters in governance interest on timely basis. In nutshell, we have to communicate with the person who are charged with the governance, and particularly if we are giving a modified report, qualified report, whether it's a qualified or disclaimer or adverse report. Before issuing the audit report, the auditor should communicate your draft report before to the persons who are charged with the governance in accordance with the SA 260. If an auditor is issuing a modified audit report without communication with the person who are charged with the governance, may be subject to professional misconduct. So, please take care while issuing the qualified report, while issuing the modified report. Before issuing this report, you have to share with the, you have to communicate this report with the charge with the governance. However, it may be sometimes the essay is saying orally, but the oral communication should also be documented. If there is an oral discussion with the management, the auditor should document, and that should also be communicated to the persons with charge with governance. SA 265, when it's about the communicating deficiencies in internal control to charge with the governance and management. During the course of audit, if the auditor is finding that there is the one or more deficiency in the internal controls, or the auditor has identified one or more deficiencies in the internal control, the auditor should communicate to the person who are charged with the government, and we have to communicate with the management in accordance with the SA 265. SA 299 is the responsibility of the joint auditor. There may be the joint auditor in the larger companies, big companies, or maybe the joint auditor appointed by the client. What is the responsibility of the joint auditor is defined in this SA 299. Joint auditor should, by mutual discussion, divide audit work. Division of work would normally, in accordance with the identified unit, specific area, division, it may be on the asset or liability, it may be on the income or expenditure, any type of the basis can be taken by the joint auditors to make a division of the joint work of the joint auditor. If during the course of the joint auditor, if any joint auditor come across the matter which is relevant to the area of the responsibility of the other joint auditor, which deserve their attention or which require disclosure or discussion with on application of judgment by other joint auditor, he should communicate the same to the all other joint auditors in writing prior to the finalization of audit. Certain areas of work, owing to their importance or owing to the nature of work involved, would often not be divided and would be covered by the all joint auditors. In case of the joint auditor is responsible for the only work allocated to them, whether or not he has prepared a separate report on the work performed. If there is a 5 unit and 2 auditors are making the audit, one is doing for 2 audit and another is the 3 audit. So they are responsible only for their own work and they are not responsible for the work of the another joint auditor. However, in case when there is no segregation of the duties and liabilities and work of the joint auditors and the work is performed jointly by the all joint auditors, then they are all responsible for those particular work. Each joint auditor is entitled to assume that other joint auditor have carried out their part of audit work in accordance with generally accepted audit procedures. Normally, joint auditors are able to arrive an agreed report. However, where there is a joint auditors are not in agreement with regard to any matter to be covered by their report, each one of them should express their own opinion through a separate report. Generally, when the joint auditor is issuing a report, they are agreeing on the all matters to be included in the audit report. But in some cases, the joint auditors are not agreeing on all the matters are to be included in the audit report. Then in those situations, they have to issue the separate report on those particular area, particular their differences, disagreements. SA 300 is very important, planning of an audit of the financial statement. Planning involves, planning is more important. We have to plan our audit planning. We have to plan the overall strategy for the engagement and development of audit plan. Once the audit plan strategy is established, then we have to plan the overall audit plan, which develop to address the various matters identified in overall audit strategy, considering the need to achieve the audit objective through efficient use of the auditor's resource. To consider various matters in developing the overall plan, like terms of engagement, we have to check what are the terms of engagement, what kind of nature and timing of the report, what are the applicable legal and statutory requirements, what are the accounting policies adopted by the client, what are the identification of significant auditory setting of the materiality level, etc. To obtain a level of knowledge of client business will enable to identify the event, transaction, and practice that in their judgment may have the significant effect on the financial information. Audit plan is a more detailed than overall audit strategy. That audit plan include the nature, timing, extent of the audit procedure to be performed by the engagement team members. So before starting the audit, we have to prepare a detailed audit plan. And detailed audit plan would come after knowing the knowledge of the business. We have to know the client business. We have to make the risk assessment of the client, and then we have to prepare the audit plan. If our audit plan is not appropriate, our audit quality may deteriorate. So planning. So then we have to discuss the audit plan with the engagement partner and the engagement team. We have to include the engagement plan partner in the preparing the audit plan. So audit plan is very, very important for the any audit. the quality of entire audit depend on your audit plan. The plan, what we have to document the audit plan, audit strategy. We have to also check if there is any significant changes during the last engagement. We have to check whether there is a change in the regulation from the last previous audit to this year. So before planning, we have to check the everything. We have to check the risk and regulation internal controls of the client before preparing the planning of the financial statement. SA 3.5, identifying and assessing the risk of material misstatement through understanding of entity and its environment. SA 3.15 is very important. We have as per SA 3.15, SA 3.15 is say the auditor have to check the internal controls to identify and assess risk of material misstatement in financial statement, both the financial statement and assertion level. So for this, we have to understand the entity and its environment. We have to adopt the risk assessment procedure. We have to identify the risk. The risk may be the two type of risk. They are inheritance risk or the control risk. We have to check the internal controls, which include the control environment, risk assessment processes, information system control activities, and monitoring of the control. And all those we have to document it. So this is the SA 3.15. We have to identify and assessing the risk of the material misstatement. Now time is short, so materiality of the planning, performing an audit is very important. Materiality, we have to set a level of the materiality according SA 320. SA 320 deals with the auditor's responsibility to apply the concept of materiality in planning and performing an audit in financial statement. We have to determine the judgment auditor after what is will be the materiality, the performance materiality, what is the your tolerance limit. So we have to plan the audit and make the materiality in accordance with the SA 320. Audit evidence. It's very important, and we will discuss in brief 2 or 3 which are very important. We have to, what are the key concept of this essay? This we have to make the sufficient. SA 500 is auditing standard for audit requiring auditors to design procedure to obtain sufficient, adequate quantity and appropriate, relevant and reliable quality evidence to support their audit opinion on the financial statement. हमने SA 230 के अंदर when we talk about the audit documentation, then we have to document this audit evidence. What are the appropriate audit evidence? Appropriate evidence refer to the quality of the audit evidence, which is measured by its relevance and reliability. And what is the relevance? The evidence must be related to the specific assertion or transaction being audited. And reliability, evidence is more reliable when it obtained directly by auditor from independent external source and in documentary form. What we have to do for these audit evidence, we have to make the inspection, we have to make the observation, we have to recalculation and reperformance the audit procedure, we have to perform the analytical procedures, we have to obtain the inquiry and external confirmation for making the good audit evidence to frame a audit opinion on the financial statement. SA 501 is dealing with the three things: inventory, litigation claim, and segment. Audit 501 makes the audit evidence important for the inventory. As a auditor, as a 501 is saying, as a auditor, at the end of the year, when there is a physical verification, we should, as a auditor, we should be there and make a physical verification. But as a 501 is also saying, if we are not able to there at the time of the physical verification, we have to later conduct when during the course of audit, we have to check on the sample basis the inventory of the assessee, and by making the backward calculation, we have to check the valuation of the inventory. It's a very important because the inventory is the big part of the financial statement. Then the what is the inventory, we have to verify, we have should follow the SA 501. With the litigation and claim, we have to obtain information from the management, from the legal counsel, and segment information we have to obtain from the management. SA 505 is the for the external confirmation, very important. Sometimes the debtors and creditors, we have to make the external confirmation in accordance with SA 505 because the external confirmation is more reliable than the internal confirmation. During the course of audit, what we have to do, at least the top debtors and creditors, as an auditor, we have to make the direct confirmation to the debtors and creditors. The confirmation may be the different. The risk, the positive confirmation, the negative confirmation. The positive confirmation means we are getting the statement and confirmation. But negative assertion means we are writing that this is as per statement a balance in our books of the client. We are the auditor of such and such client. And if we have not received the response within such and such date, it will assume that our balance is correct. This is the negative. So where the response, lack of response, the negative. So external confirmation, as a auditor, we have to follow SA 505. There is the so many SA 510 initial audit engagement. The opening balance, we have to check before starting whether the opening balances are in agreement with the last year the financial statement, or in case of the first time audit, we have to perform the audit procedure to take the audit engagement before the audit engagement. SA 520 analytical procedure, SA 530 audit sampling. It's very important. We have to obtain the audit sampling as per SA 530 so that it may cover the entire population of the samples, and according to those samples we can conduct the audit, and we have to make the tolerable error. Tolerable error means the auditor the maximum error which can the auditor can tolerate. There are so many essays. 540, 550 for the related parties, 560 though the subsequent event after the balance sheet date, 570 the going concern, 580 the representation, SA 600 using the work of the another auditor, SA 610 using the work of internal auditor, SA 620 using the work of an auditor's expert, SA 700 opinion of the auditors, SA 705 modification to the auditor's opinion. However, this is long subject. It is not possible to cover the entire essays. And I try to cover some important essays. And thank you for the CP committee. Thank you, our worthy chairman, providing this opportunity to me. And thank you to all the audience who have listened, who have show their interest in the standard of auditing, which is the least in our our position list, our way. So over to you, Varun. Thank you. Thank you.
Yes, sir. Thank you, sir. It was a delightful session. And I have some questions. First question is from Rajesh Sirsat. He is from Mumbai. He is asking, in one case, employee has used inventory from their end and same reported as inventory receivable from employee in 2024. In 2025, he came to know can't give employee inventory since he has no inventory. In 2025, can we report in inventory negative, same amount part of write-off under change in inventory or any other way?
In the SA 248, when we have to detect what are the impact, we have to see whether it's a fraud. First, we have to determine what is the impact and why the inventory is showing as the inventory with the employee. We have to check. We have to take in the written representation from the management, and then we have to check, use our professional judgment whether it should be written off or it should be what is the materiality. Again, what is the materiality? So we have to check all those things, and we should use our professional judgment according to and disclose in the financial statements.
Okay, sir. Only one question is there for you, sir. Thank you to our speaker for highlighting the key aspects of standards on auditing in today's session. Gratitude to the CPEC of ICAI for their continued efforts and appreciation to all attendees for active participation. I would now conclude this session with my concluding remarks. Thank you all for joining today's webinar and contributing to such thoughtful discussion on tax audits and standards. The insights shared are sure to help us in our professional journeys. On behalf of CPEC of ICAI, we appreciate the time and expertise of our speakers and the active participation of attendees. If you have any further queries or feedback, please reach out to the committee. Wishing everyone continued success. Thank you once again.
So CP committee would like to thank both our faculties and Varun Gupta sir for an amazing session. Thank you so much, sir.
Thank you very much.
Thank you. Thank you, sir.
Thank you, sir.